Hey guys, welcome to today's video. I am going and doing a video with Jeff, who is inside our program, because I want to share with you that you don't just have to follow this algo systematic approach. You can actually add your own type of charting flair to it. And I'm really excited to see what he has here. He's been posting a lot of great stuff in the chat where he's using a lot of levels, support levels and Fibonacci levels. Anyways, this video is not about me talking, it's about Jeff. So Jeff, thank you so much for being on this video and doing this with me. I'm so excited.
All right.
To get started, let's start off with some basic questions and then we'll get into the charting. So what brought you to trading in the first place?
Just kind of like a side job, just kind of, for some reason, I love trading. So just before COVID, I kind of got a little more serious about it. And then plus we had time at home. But then I started going down the Twitter route and you see all these profits. And I went through some of the discords. I never went big, so I was always cautious. But it was just this endless kind of like continuation that finally somehow, I think maybe through Twitter, is that I found out more about credit spreads. And that's where it really changed the whole game for me because I came from kind of day trading and just buying like SPY options or the call outs, on different groups. And it worked. You could make good money. That's really was kind of like the hook was like consistent $300 days just trading SPY options. But it takes a lot of work. And so the next level I got to, and when you read Mark Douglas's book, you see that selling options and even Chat GPT, I asked it, is the way that the majority make their profits, in options. When you understand options, it's a little complicated, but once your brain gets it, it's like magic. The light bulb goes on in your head, and you're like, all I want to do is basically sell premium and stay as far away from the stock as possible. And that's the whole idea. And then it didn't, I wasn't up at 6:30 in the morning sweating bullets online trading because I'm over here in California. So it's early. It's hard to get your brain up and running that early. So credit spreads, much more kickback, much more like a swing trade where you just kind of watch it and you have to check in. There's really hands-off kind of work to it. So that's where I've kind of landed as my home plate here. So
Yeah, that's awesome. I mean, a lot of people have different backgrounds when they're coming into, especially selling options. That's typically not that's the first thing that most people do. What was that transition from day trading to credit spreads like?
it was actually really good because it was tough to make it with all the different elements of trying to trade. And I have another book that I was reading about selling options, and it explains that exactly. It says when you get down to the nitty gritty of trading options, you're a skill trying to make money. Whereas with credit spreads, the probability and the profit is baked into it the second you put in the trade. You sell that premium, it's a box, and that's the only factor that you control. Now you're like, here I am, and that's it. There's no, okay, well, maybe I did this wrong kind of thing. Like it is what it is. And that's what's really cool about it was like it gives you more of a peace of mind because you realize that you're just mathematically putting on a trade like this, and then like Tastytrades, it'll tell you the probability down there. It'll say 90% probability of success. I never had that with day trading. Day trading was like, if it went bad, it was your fault. Because then you get back on Twitter and Discord and everybody else is like, yeah, such and such exploded. And so you always blamed yourself. Whereas credit spreads, it's automatic. You're selling something, just hoping it to decay and go away, not appreciate like a rocket or drop like a rock.
Definitely.
So much more peace of mind, would be the moral of the story.
That's awesome. Yeah, so obviously what people are here for is the charting, so we'll dive into that. But real quick, isn't it true that you took a lot of your trading profits recently and went on a hiking trip that you've been wanting to go on?
Yeah, so kind of a cool little story that happened was like I started kind of consistently getting into the spreads like in April, June, May. And one of the goals I had for that year was to go hiking in Colorado. I finished college in there at Colorado State, studied environmental health, and then I left to come back to California where my family is at, and we have kids. So I got two boys that are 15 and 12 in school, so I'm a working dad. I work from home and work at university too. But really, I took the profits from that to go hiking as sort of a promise to myself. I said, when I leave Colorado, these mountains are beautiful. I'm promising to myself I'm coming back. And like during COVID and everything else, nothing worked. And then I was like, okay, can I fly? Can I drive? So finally the opportunity came. and the profits from the credit spreads, I could pay for that whole trip. So it really kind of worked out, and then I did smart things. Like when I went to Colorado, I didn't do any credit spreads. I was like, I was in Austin's group hanging out, but it was time for like, I want to be present for it. It does take that bit of concern because like say like a small thing like on Webull, I don't have stop losses. It doesn't have a function in that. So I can't just fully automatically, execute a trade. So I took the money out, did the Colorado trip, and it was amazing. It was just the best ever. Went to Rocky Mountain National Park, and just it's kind of cool because really the credit spreads and that work and that journey that it takes to get there, to take those profits and use it towards a dream trip, really pays for itself because it shows the hard work. Like I look back and I'm like, holy moly, I can't believe I used to trade SPY every day, like as an option. It was so exhausting, but you grind and you learn and you kind of see how that works. So that's cool.
Awesome. Yeah. So before we get into it, I just want to explain for people who don't know, a credit spread at the bare minimum is basically betting that a stock will stay above or below a certain level. And so if you're right, then you make money. If not, then you lose. Now, there's a lot of different ways to do this. I use trend following. Jeff does some of that, but he also adds his own twist to it. So Jeff, walk me through what it is, how you look at stocks. What's your type of strategy here?
Okay, so what I look at is I like sort of charting on TradingView. So I use Webull as my options trader. I've tried different platforms. For me, Webull is the bomb because I like the way the option chain looks and I like the bright green numbers. So the bright green just sort of is like an emotional thing, but I can envision a larger balance when I see bright green colors. And so I like the way the Webull works. But what I'll show you guys, I'll share my screen real quick.
Yes, we can see your
Okay,
screen.
okay, screen share. You got it?
Yep, you're good.
Okay, all right. So for those of you guys that are watching, I use TradingView, and what I like to do with the credit spreads is since the credit spread really looks like a rectangle, it really fits well with what I was already doing, which was charting sort of the daily support and resistance levels based on the Fibonacci's.
And
So
so you mean like when you set up the credit spread trade, like because you have those two different levels, you're saying like it's basically a rectangle of an area that you want the stock to stay away from, right?
yeah, so it's a real, so like if you have SPY going up, if when I'm with your group and I put on a credit spread, like say it's a put credit spread, I make a little yellow box below the stock and it'll say 438, 432 expiring this date.
Yeah.
And then I can visually see how much space I have. And then you can kind of see like with the Fibonacci's, there are a series of levels. He was an Italian mathematician, but he came up with these series of levels and on TradingView, and you can do this on Webull too, any charting software, you basically kind of plot the high to the low. And so that gives you these levels. And what I learned from a different Discord is a lot of the Wall Street algos run off of fibs. They're basically controlled to see these inflection points.
So before we get into
Because
the specifics of it, walk me through on this chart how to add the Fibonacci and where to trace it out if I'm an absolute beginner.
okay, so this is what I do. So you can go put in SPY right here,
Okay.
and then we have the SPY. Since that's our favorite, I'll click on the daily chart right here, and then what I can do is, or actually, I have it right here. So I'll take it off. So watch, I'll kind of show you how to. This is how you chart a fib. And then this was a note I made to myself. So Fibonacci, so say we have the August high up here. August 1st, you go over to the left. Fibonacci retracement. So you're going from high to low.
Okay.
And then I'll draw one of my boxes. So now you suddenly have all these levels. You have the 7, 8, the 6, the 5 is the halfway point, 3, 2, and 0. And then like Austin said, the way I chart sort of a spread would be to draw a small box down here. So like say this is a put credit spread. And then I know how to sort of edit them. You can do the coordinates, like say it's 443. So this would be like an example of a one wide put credit spread. So 442, and then you can put some text inside of there too. 443, 440. There you go. 442. And then so this is kind of a good example We'll move him down here. And then this is how we kind of look at it. And then like I'll have an example here on the 15-minute chart. So then I chart on the 15, I chart the fibs on the daily chart on SPY. And then that's pretty much it. So right now I'm not in any credit spreads because I have a lot of work going on. So, but this is how you kind of draw, and then I can make notes to myself on when I get in and out of a trade. So today I could say 4 contracts at 443, 442, call credit spread, call spread, and then I add the date, like say it's the 20th. And then you can say, what I would say is like in at 0.20, which is the premium you want to collect. And then algo, ask for and 0.18. And then if I'm in Austin's trade, I'll say Austin in at, say he did a great job. He's in at 30. And then that's my notes to myself. So I know when I got in, I can see my fib levels, and I can see where my, ideally this would be a call spread. So it would be up here. Say today a call spread came out. So this would be a trade, and then this is how I kind of represent it visually. It is all you have to do. Now you've made your premium. You've sold those calls to somebody. Now all the stock has to do is stay below your box. And then what I do is as the week goes on, I just pull the box over here until you finally get down to your expiration date. And then Austin has other rules about, say, SPY starts dumping here, then your spread is going to suddenly become profitable. You're still going to have extrinsic value that you have to kind of deal with. But if you get to somewhere like 0.5 or 0.3, then you can get out early. So your spread might sort of collapse. I don't know what the exact term is, but basically it would shrink down to where it's profitable. You still have time, but out you go. But this is way better than day trade. You put in the spread, you collect the premium at the second that you get in, and then you can still see how you perform. You can say, okay, the algo came out, I obeyed the algo, this is where I got in. And then there's different aspects, like if, say, the stock ran up close to your box and you wanted to add position to get a bigger premium out of it, and then it drops down. And you can do that too. I've done that before. Sometimes it's more of a trade because you see like the market has dropped. So I have like a technique where I'll kind of scale in.
Let's now go into that. So obviously,
Okay.
visually seeing the credit spreads are nice, and knowing the levels and tracking is actually super important. I've noticed over the years of teaching people that the people actually track things improve faster. What a surprise. But show me, now that we know how to chart the fib levels, show me how you actually read them, like what each level is and how you actually tell what the stock's doing.
Okay. So the way I kind of look at it, and then I'm active in the Discord, so I post these occasionally. So what we would look at is, for me, is the Fibonacci really is these bounce plays, and it helps give you confidence on what's going to happen. So like a small rule I have is I don't like any diagonal lines. So no diagonal lines, because in my day trading world, I realize that diagonal lines are a bias. You're seeing something that's not there. But that's
Do you
just
mean like trend lines?
kind of, yeah, like that, like
Okay.
an uptrend channel. Like,
Okay.
so I prefer to eyeball fibs. Then I don't feel like I have a bias towards something happening. I go, okay, where's my bounce play? But there's times where that doesn't work out, where like you could see an obvious trend and I'm looking for a bounce, and then it doesn't happen because it is actually trending. And then I lose that spot. But this seems to work out well, and the horizontal nature of these fibs works with the spread boxes. So we're all little boxes and lines just going horizontal. So the way I look at it, like today, if we can go through this last week, was you have market coming down since August. August and September are a rough month anyways. The Fed's coming up, and here comes inflation data. And what's happening? Gas prices are high, and who knows about unemployment. So what you have is you basically mark the top, and as the market goes down, I'm moving this 0 line down here because I don't know where the bottom is. So I That's really the nature of fibs, is you don't know if this is the bottom or if the real prophecy is way down here. But you go as far as it basically had, as the bulls have pushed it. And then you read your bounce levels. So when we hit this bottom here a few weeks ago, I kept moving this around because originally this fib was over here. It was with these candles, and this was the base. And then Wall Street really pushed down below that fib and then bounced up, like a trampoline. And
Okay, so we
but
use
that's
the
okay.
highs and lows for the fib levels, and those keep changing. But what are all the levels in between, and how do you use them?
Yeah. So those in between, what you'll see is the 50 is a medium point between the high and the low. So if you look at this whole maneuver, the 0.5 is like almost like being flat on a trampoline. You're not overbought and you're not oversold. So when the market gets to that point, you have a kind of a balance. Like the bears and the bulls, they're both happy. You're not in either direction. So like a good example of that is like where the Qs are at right now. So the Qs, well, they were kind of sitting, but they're sitting closer right now on, on today's date, closer to the 0.5. So you can see that the tech is basically ran up and now it's neutral and it's sort of floating, whereas SPY is still working to get up to 5. It's still oversold. So this is kind of like this where the fibs kind of show you a little disparity. And so what you have is on these levels, then you have like the 0.78 and the 0.68. Those are common areas where there's a lot of where the bears will push the market up and slam it down. Once you get to 5, the bears are happy. So you can see in this pattern, although we're technically still in a bull market, since August, we're in a downtrend. So what do you expect the little ball to do? It slams down. It just happened to find this 382, this level right here. And then it goes right up to the 7.8. And then it gets slammed back down. You don't know how far it's going to go. Sometimes it could go here, but it always goes to levels. And that's where you can see. And like it's sort of like now, like everything goes level to level. The SPY doesn't hang out in these big zones. It's just there's nothing there. And that's what I've learned through charting. It sort of proves itself true. And then from the other elements that I've learned where they explained that a lot of Wall Street algos actually run off fibs. And you can see it. I've seen days where it happened this summer where we had days on SPY where nothing happened. It was almost like no one at Wall Street was at home. And the algos were just running SPY up and down to make money. Because they're like, well, what else are we going to do? And I charted the day, and that's all the algos did. They didn't stop in the middle ground. They're like, we're going to shoot it up to 7, and then we're going to rocket it down. And if no other money comes in to move it, this is the program they're going to play out.
So
So
another
like
way to
now,
say this is essentially the Fibonacci is like mathematically based support and resistance levels that a lot of people follow and is accurate more times than not, right?
exactly.
Okay.
Yeah. And so it's not based on a bias at all. It basically is just these levels. So you can know, and since in with the spreads, we're basically just have boxes at levels. It's really nice to see when the algo puts the spread below a support. I go, ha. It's a sneaky trick. But when I plot it, I can see it and it gives me confidence. So like if I was on one of these, I could say, okay, and that's what I'll post in the Discord sometimes for the groups. Hey, if anybody's in the 434s, we're sitting right below key support. So if you have this area where SPY can bounce between the fib levels, that's where you don't panic. It's like a chop zone because SPY either wants to go to that level and reject or wants to go down here and test it in a bounce. But if you're sitting down here, you don't care what happens up here. You're like, great, but you do have to know, and this is what's cool about the fibs, that range of bounce. Where is this sort of untethered ball going to go? And that's the only concern you have pretty much all day, because like then you have your box, which is a predetermined sort of reality, and then you just watch SPY go. So that's your day trade day. It's
Yeah,
kind of
so I
fun.
mean, so you're looking at this from a daily perspective, which gives you the long-term time frame, but you're mentioning a lot about the day. Do you also chart Fibonacci on like a 1 minute chart or something that's closer in?
No, really, I don't.
Okay.
So, um, because that's a little bit too intraday. Like I don't need to know where the movement is per day.
Mhm.
So my game plan is like the SPY daily with the fibs, and then I'll watch SPY on the 15 minute, just with kind of like the smaller support and resistance lines. So you say, and that's more of just kind of like an eyeball skill. But you basically say, okay, where does SPY look like it's bouncing? But I do have here, like if I'm sharing this screen here, I have notes on the 15 that like 382.57 is the 0.618 on the daily fib.
Mhm.
So it's just, and then I have another one up here. So I am sort of transcribing the big fib to my 15 minute. And that just lets me know that that yellow line I'm looking at is the reason I put it there. And it tends to extend for a while. And then a little trick I have is I use the dotted lines for temporary support and resistance. And then I'll go back and delete those.
Mhm.
So the big yellow lines are big trends, big levels, I mean. And then these little small hash ones are kind of like the local, maybe like a daily thing that SPY's kind of going around and testing. So that's kind of the visual that I like. For me, it kind of works. And I think for the group, it's kind of an easy learning lesson versus, like the Richter clouds or something like that. Ripster clouds. So you can get complicated.
Yeah, I love your charts. They're always super simple and they make sense. Like every time you post on the Discord, I'm like, oh, let me go check out what Jeff posted. But anyway, so you've taught a lot on Fibonacci's, which has been great. Like I've learned a lot. But let's bring it all together and like how let's just say you had to put on a trade today. Obviously, it
Mhm.
may not be ideal to put one on right now, but let's say you have to. How would you structure it? How would you go through and think about it?
Yeah, so what I would go through is obviously I'm looking at the Discord. I'm looking at the alerts. I have the first question I have is, do I have an expiration for that week?
Hmm.
So I look at it and like I'll go shopping. I'll say, okay, I want one per week or one per expiration. So with the mother of all credit spreads, you might have a Monday expiration, a Wednesday, or a Friday. So it kind of depends on what you want to put, but I'll try to at least have two or three per week. And so you want to load them up, one per each. And really the name of the game is to size small. So that's really where you kind of like you work on sizing to do risk management. That was probably the biggest lesson I had with the spreads is really, and that's what's cool about the spreads. You have a defined loss. So if you have a stop loss at 50 and you collect a credit of 20, you have 30 bucks over here and 20. So you almost have a one-to-one relationship. And that's what's beautiful about the $1 spreads or the two is basically Austin's method for saying this is my risk to reward. So then like I had to learn this kind of a little bit later because I was like, what's max loss? They're like, you got to pay attention to that. And I was just out there, buying spreads at the beginning. But then as I started to learn these intricacies, because it takes a minute, like it's almost like learning the cockpit of an airplane. It's a little crazy at first with the languages and the selling and getting credits. But once you get it, the light bulb goes on. So my method then is basically to shop per week or per expiration. And then what I like to do is either it's an Austin trade or if I take it from the algo, it's sitting under support of some reason. I just like that idea because the algo might then give me another one later that's closer to what I like. And then so I kind of marry that with the fibs. And so putting on the trades, then I'll have like a little notepad. I go into Webull to put on the credit spread. And one thing you have to then look at is like really understanding getting that minimum credit. It's critical because you might want to go shop for something that's further out, but then you get into not having a positive risk to reward. Like an example, I was like, why wouldn't anybody just buy them like a 2 cent spread, that has a 99% probability of like success? And it's because you have to put up your credit for that $2. You're exposing all that money. And that never plays into like a day trade kind of scenario. It's either cash in or cash out. So there's no free lunch for everything. So
Yeah.
that's what you kind of get. And then what I do is then I post in the Discord what I put on the trade. I make my notes on my trading view. I think that's probably one of the best things to do, because then you'll go back to the day, like my little clouds. That allows me to know what was I reading, and then how did it play out? Like, did SPY start heading towards my spread? And then you'll kind of learn, like you'll see your account go down because now your spread is widening, and you're like, oh no, I'm red all day. Don't panic. We're here for the long haul. Then theta starts to work, and you start to see cool things too. Like say you own spreads over the weekend, and now you're at like 18. You come back around on Monday after theta's decayed a bit, and boom, you've already made money. Like, and then as the spread gets closer to expiration, you see how decay starts to eat away at SPY's movement. It starts to eat it out where SPY would have to move tremendously for your spread to actually, become improfitable. And so that kind of gives you assurance as your spread goes towards expiration, almost more confidence. So that's what I like. It's just a different method of trading. And that basically, then I'll post some of that on the group. I watch, then Weevil on my phone. And then a small thing I do is I like to be around on Fridays to kind of see if we have expiration Friday to work on the trades. And then I don't trade on mobile. Like, that's one of my things. I want to graphically see it, but you shouldn't have to. There shouldn't be anything where there's an alert midday and you have to get in. You know, like it's you can always have it roll the next day because these are longer plays, so it doesn't have to be kind of a hurry up thing. And then the biggest advice is basically just start small, because there's a lot of mechanics to how these work, how these spreads work. And that's why it's kind of cool to see them visually. But whatever broker you have, like I've had friends that do this, and they do debit puts and debit spreads, and sometimes they're backwards, and it has to do with how each one of your trading platforms executes. Schwab is different than Tastytrades. Robinhood is real simple. I like Webull just because it's like a middle ground. It's visually really nice, but I can still see the option trend. I have a Tastytrade account too, which I like, but to me, it's a little more, it's about the option chain. Like if you're looking at IV and Delta, and that's really how you're almost shopping for them, it's kind of looking for that imbalance, then that's what Tastytrade is good for. But a lot of people like it, and the online stuff is good too. So, but that's pretty much it in a nutshell. Then I pretty much have just kind of worked my way through taking those base hits. I'll post those online. You might make, say you have like a 4 contracts at one wide, you make like $80 that goes back into your account, and then you just do the compounding of your account. And that's how I kind of trade. And it just keeps going, it keeps going. You take your occasional losses, you understand those. You have a win-loss rate. And so you just, like a sort of a battle, you understand you're going to lose a few to make a lot. And as the stock starts trending like SPY, that's where all the green starts to come in. So that's in a nutshell.
Awesome. Yeah, I mean, you covered a lot, but I really think that this video and this interview here and your teaching will be really beneficial to our current members, just to be like, hey, this is another way to look at it. And also, I think a lot of people on YouTube will find this interesting too. If you're on YouTube watching this, let me know in the comments what you think. Anyways, I think that's all I have. Is there any parting advice you want to give? I know you said stay small, which is super important, but if there's anything else, feel free to let them know.
I just say what I've looked at from going through the Twitters and the Discords is you'll probably end up somewhere in the credit spread world, either selling covered calls, cash secured puts. It's what Wall Street does to make money. When the big asset managers do that, this is what they do. They sell it, and it's much more peaceful. You just have to understand the mechanics of it. And so stick with Austin's group. He's the best thing that I've found. The group online with Discord is super helpful. This is more like swing trading, but with appropriate sizing, you'll just have a peace of mind. And it's something I'm going to teach my kids to do. So it sounds like a cliche, but I got 2 boys, and I'm like, hey, you can do this. You guys understand technology. This is the way it works. You sell options to people and collect the premium. Way better than day trading. So that's my 2 cents.
That's awesome. Your kids are going to be so far ahead in life when they're like 25.
Yeah.
So that's awesome. Anyways, thank you once again for jumping on this call and making the time.
Okay.
I appreciate it. And I know everyone else does too. So thank you, Jeff.
Okay. All right. Thanks, Austin. All right. See you guys.